the idea that changed everything. Before funds, investing was a luxury sport for the wealthy. Ordinary people couldn't afford dozens of stocks. One mistake could ruin them. Funds solved that. They turned capitalism into a team game. Your $100 doesn't sit alone. It joins millions of others, forming a financial organism with the power to move markets. This idea grew into an industry now worth more than $120 trillion globally, more than the GDP of every country on Earth combined. And at the heart of it stand three giants: BlackRock, managing around $10.5 trillion, the largest asset manager in history; Vanguard, around $8.6 trillion, founded by John Bogle, the father of index investing; State Street Global Advisors, roughly $4 trillion, creator of the first ETF in the United States. Together, these three own significant stakes in almost every major company in the world: Apple, Google, Microsoft, Amazon, Tesla. They are not kings, but something subtler: custodians of global capitalism. If they sneeze, markets catch a cold. Mutual funds were the first great democratization of investing. They pooled savings from ordinary people and invested them into diverse portfolios. For much of the 20th century, they ruled the financial world. But there was a problem. They were expensive and often underperformed the market. You'd pay a manager 1–2% a year, only to earn less than the average index. By the 1990s, the industry was losing credibility. And then, one man quietly started a revolution. In 1975, John C. Bogle, founder of Vanguard, launched the first index fund. A fund that simply copied the S&P 500 instead of trying to beat it. Wall Street laughed at him. They called it Bogle's folly. Today, those same bankers invest their retirement savings in his folly. Because Bogle was right. The math is simple. Over long periods, most active managers fail to outperform the market after fees. Meanwhile, an index fund charges as little as 0.03% annually and delivers the same return as the market itself. That difference compounds into millions over a lifetime. Vanguard grew into a quiet empire, over $8.6 trillion in assets, more than 30 million investors. Funds like the Vanguard S&P 500 ETF, VOO, and Total Stock Market Index Fund, VTI, dominate portfolios worldwide. What Bogle created wasn't just a fund, it was a philosophy. Don't chase trends, don't time markets. Own everything, hold forever, and let time do the work. While Vanguard stood for simplicity, BlackRock mastered complexity. Founded in 1988, it built the most powerful risk management system in history, Aladdin, a platform analyzing trillions of dollars across global markets. Every major bank and government uses its data. It's said that Aladdin watches over 10% of the world's financial assets. BlackRock's influence goes beyond money. It reaches policy. Its CEO, Larry Fink, regularly writes letters to world leaders and CEOs urging them to adopt sustainable investing and climate-conscious governance. Critics call this financial activism. Supporters call it the new capitalism. Exchange-traded funds, ETFs, are index funds on steroids, flexible, tradable, and cheap. The first US ETF, Spider S&P 500, SPY, was launched by State Street in 1993. Today, it holds around $500 billion alone, one of the largest funds in history. ETFs made investing frictionless. Want exposure to artificial intelligence, clean energy, or cybersecurity? There's an ETF for that. By 2025, There are more ETFs than actual stocks on the market. Over $11 trillion is now parked in ETFs globally. It's an incredible achievement and a quiet risk. Because when everyone owns the same thing, diversification becomes an illusion. When panic hits, all those safe funds fall together. Then there are the daredevils, hedge funds. They promise to make money whether markets rise or fall, through leverage, short selling, and complex derivatives. Some names became legends. Bridgewater Associates, founded by Ray Dalio, managing around $125 billion, famous for its all-weather strategy. Renaissance Technologies, using math and AI to dominate Wall Street. Its Medallion Fund returned over 60% annually before fees. Citadel, led by Ken Griffin, managing over $70 billion, one of the few to thrive during market chaos. But for every success story, there are countless failures. The same leverage that brings spectacular returns can also destroy fortunes overnight. Hedge funds are powerful, but they play a different game entirely. Not wealth preservation, but financial combat. Beyond the private world stand the titans that represent nations themselves. The Norwegian government pension fund Global, worth over $1.6 trillion, invests the country's oil profits across 9,000 companies in 70 countries. Japan's government pension investment fund GPIF, the largest pension fund in the world, holds around $1.8 trillion, mostly in stocks and bonds. China Investment Corporation, Abu Dhabi Investment Authority, and Saudi Arabia's Public Investment Fund. Each manage hundreds of billions. These funds don't just invest, they govern. They influence corporate behavior, fund global infrastructure, and in some cases, quietly steer geopolitics. When Norway's fund divests from coal, coal stocks fall. When Saudi Arabia invests in AI or sports, industries shift overnight. They are modern empires, not of land but of liquidity. By 2025, roughly 65% of all equity assets in the US are managed passively through index and ETF funds. That means algorithms, not humans, are deciding where most of the world's capital flows. It's efficient, but it's also fragile. When too much money follows the same indexes, markets start to move as one organism. Volatility disappears, until it suddenly doesn't. In a crisis, when everyone sells at once, liquidity vanishes, and prices collapse faster than ever. We saw glimpses of this in 2020 and 2022, flash crashes, ETF dislocations, entire sectors moving in perfect sync. The invisible hand of the market has become a handful of giant hands pressing the same buttons. For ordinary investors, the lesson is simple. Use funds, but understand them. Index funds are your backbone, low-cost, reliable, and time-tested. ETFs give flexibility, but don't treat them like lottery tickets. Bond funds add stability. They may not thrill you, but they let you sleep. And if you're tempted by hedge funds, remember, the thrill has a price. Diversify across time, geography, and purpose. Because even the strongest fund can falter when faith becomes fashion. Funds are humanity's collective bet on the future. They allow millions of individuals to participate in the grand story of progress. To invest not just in profits, but in civilization itself. They've made markets more democratic, and paradoxically, more concentrated than ever. They hold both promise and peril. Efficiency without emotion, scale without soul. But if used wisely, funds are the closest thing we have to shared prosperity. A way for your savings to grow alongside the achievements of humankind. Welcome to my channel. Here, we'll dive deeper into the world of global funds. The forces that move your retirement, your currency, and your future. Because understanding them isn't just about making money. It's about understanding who really owns the modern world.